Hello, you're watching News.Markets. Now, you all know it's been a dismal few months on global markets. The slump in industrial commodities, including iron ore, copper and oil, indicate a slowdown in commodities guzzler China and other emerging markets. Gold, too, has been weak, not responding to the rise in volatility and risk in stock markets. So what's the position of gold in the current economic climate? I'm joined by News.Markets, Chief Executive of Sector Investment Managers. Thanks for coming in. Now, I know you focus on the juniors, but some research from one of the big players caught your eye, hasn't it? What's your analysis?
That's right. We recently picked up some research produced by Goldcorp, one of the largest diversified gold miners, that argue that the peak discovery of new gold ounces happened in 1995, and it has been declining since, notwithstanding the fact that exploration spend accelerated dramatically in the bull market years from 2000 to 2011. Now, they conclude that peak production is actually happening this year, 2015, and from next year will start declining sharply, compounded by the fact that this exploration spend has started being cut dramatically by the sector, companies across the board. So we are likely to find ourselves in an environment where production starts declining very sharply, and should, for whatever reason, investors switch back into safe haven assets such as gold, demand could rise and therefore create an exponential rise in the gold price because of the shortfall.
So how will that affect the investment strategy when it comes to gold? Are you looking at EFTs? Are you looking at the miners?
We always invest in miners because we think that if we invest in carefully selected companies that have a very sustainable business model, even at lower gold price environments, they will sustain themselves and have this operational gearing to the rising gold price when it comes.
So companies like who? Companies
like Lakeshore Gold is one of our top picks that operates in Canada and has been very, very successful in reducing its operating costs and managing its balance sheet very prudently to sustain operations in this environment, and at the same time retain this operational gearing that can expand operations once the gold price recovers.
Who would you steer clear of?
I would stay clear of the large diversified miners, in fact, in this environment, like Barrick Gold, that are burdened with huge levels of debt. And it is clear now that they are negotiating all their covenants with their bankers. They are under intense pressure to cut back on production and cut operations and sell assets. And they are clearly struggling in this environment.
Now, you manage the junior gold fund, but you also manage the junior oil fund. So let's switch, because oil's been doing even worse than gold. How would you invest in there? Are you looking at the majors? Are you looking at explorers? Are you looking at funds?
In this environment, I think investors have to be very conscious of the profitability and the balance sheet pressures on companies.
So what do you like the look of in your portfolio at the moment?
Well, two of our bigger holdings are two companies that have some significant discoveries last year. Our biggest holding is FAR Limited, an Australian company that has had actually a very large discovery offshore Senegal in West Africa. And they are moving now with their partners to drill a second appraisal well that could prove up the real economics of this discovery that we think far outweigh the market capitalization of the company. And the second one is Carnarvon Petroleum, that similarly had a very large discovery in northwest Australia, offshore, with its partner Apache Oil. The strange thing about this company is that it has a market cap of about 100 million Australian. It has more than 100 million in cash on the balance sheet, and a royalty from an asset they disposed of in Thailand that has a probably net present value to them of 30 million. And this discovery they had last year is nowhere to be seen in this valuation. So you are getting it almost for free.
For you, well, News.Markets, it's always an absolute pleasure talking to you. News.Markets. Thank you.